This is our top 5 gainers and top 5 losers analysis for August 5 in preparation for the next trading day on Tuesday. You will hear my technical analysis together with my interpretation of the trade and volume distribution and true market sentiment charts of these 10 stocks, followed by my overall sentiment, and lastly, of course, with my recommendations. I'd like to remind everyone that everything that we're going to discuss in here is geared toward short-term trading purposes. If you will if you will see any of these 10 stocks trade above or below the dominant range that you're about to see, make sure that you post a request for the stock's latest trade and volume distribution and true market sentiment charts in our private clients forum. Let's begin with PHEN. PHEN closed on Monday at 2.55, support is at 2.2, resistance is at 2.8. Our 10 MACD combo is not yet valid because the MACD line is moving below the signal line. RSI is already upward sloping, but it is still trading in the neutral territory. The risk level of PHEN is already high. The positive DMI is hovering the negative DMI, but the ADX line is still below 25 points, so I cannot say that PHEN is already trading in a confirmed, very strong upward momentum. Let's take a look at the trade and volume distribution chart of PHEN. So this completes the four criteria for us to get a bullish momentum power indicator. The dominant range is between 2.49 to 2.55. The true market sentiment of PHEN, let's take a look at it. True market sentiment of PHEN is bearish on the other hand. So meaning to say, there is still some sort of hesitation among traders to buy the stock at a price higher than 2.55, but with our bullish momentum power indicator, there's still a chance for PHEN to test the resistance near 2.8 for as long as volume maintains its position at least above the 50% of the stock's 10-day volume average. You know this very well, especially if you attended the Evergreen Strategy in Trading the Philippine Stock Market seminar. Speaking of which, I'll be in Dasmariñas, Cavite this coming Saturday to conduct another seminar for those who are interested to advance their understanding and knowledge about the methodologies that I have been teaching you here at Equilist Analytics. So my overall sentiment for PHEN is bullish in the short term. My recommendation for those who have had PHEN is to, you can hold your position or you can top up within the dominant range. If you don't have PHEN but are planning to enter a new position, if you are a newbie trader, I suggest that you wait for the 10 SMACD combo to be revalidated. But if you regard yourself as an experienced and disciplined trader, you can go ahead and do a test buy within the dominant range since our momentum power indicator is bullish anyway. I also highlighted this, emphasized this strategy during the Evergreen Strategy in Trading the Philippine Stock Market seminar. Do you still remember that PowerPoint slide where I discussed when you can preempt the 10 SMACD combo? This is it. Okay, make sure that you calculate your reward to risk ratio. Do not forget that. I'm not going to repeat this reminder again. For those who are yet to enter a new position in any stock, you have one extra process that you must go through, and that is the calculation of your reward to risk ratio. Refer to the quick start guide if you already forgot how to calculate your triple R. After PHEN, we got PXP. PXP closed on Monday at 11.14. It continues its ascent above the support at 10.05. Resistance is at 13.6. Our 10 SMACD combo is valid. Volume is looking good since last week. RSI, on the other hand, is already approaching the classical overbought level. Eyes on your trailing stop loss, please. The risk level of PXP is already high. The upward momentum is very strong. Now, the dominant range here is between 11.2 to 11.5. That makes our momentum power indicator bullish. The true market sentiment of PXP is neutral. Partially, it could be because RSI is already inching up closer to the classical overbought level. That should not be an alarming thing for us, especially if you remain loyal to what I have been advising you, which is having a trailing stop loss. If you still have PXP and it's still trading above your trailing stop loss and you'd like to know if you can still top up, yes, you can. We have data-driven signals to go ahead and do that, provided you do it within the dominant range. But of course, always be on top of your trailing stop loss because profit taking could take place any moment from now, especially those who are loyal to the classical overbought territory of RSI, whereby they translate that as time to lock in their profits. If you don't have a position on PXP yet, but you are planning to enter a new position, calculate your triple R first, your reward to risk ratio, and consider the possibility of profit taking to take into effect as soon as RSI touches 80% and above. But if you will strictly follow your trailing stop loss, you can also go ahead and do a test buy within the dominant range. After all, there's no risk without there's no reward without a potential risk. Okay? So I am bullish on PXP. That's my overall sentiment. Next, we got PX. It closed on Monday at 4.08, support is at 3.86, resistance is at 4.4. I like the volume last Thursday, Friday, and on Monday. The 10 MACD combo is valid. RSI is still at 10 to 11 points away from the classical overbought level. The risk level of a PX is already high. The upward momentum is already 1 point away from winning that very strong category or label. So one more green candlestick on Tuesday and PX will finally win a very strong upward momentum label from DMI and ADX. I'm not going to cite the foreign investors' participation because it's very minimal. It's insignificant. The dominant range of PX is between 4.08 all the way to, actually it's 4.07 all the way to 4.15. That makes the momentum power indicator bullish. The true market sentiment of PX is neutral. It's neutral. Anyhow, my overall sentiment for PX is bullish. So if you are asking if you can top up on your position, yes, you can still go ahead and do that within the dominant range. If you are planning to enter a new position, if you can also do a test buy provided you are satisfied with your reward to risk ratio, and you have to do it within the dominant range as well. Do not forget what I have advised you during the introduction. If and when any of these 10 stocks begin at a price lower or higher than the dominant range that you have seen or that you are yet to see. So that's it for PX. Next is NIKL. NIKL closed on Monday at 2.64. Support is at 2.35. Resistance, let me plot the resistance at 2.7 as a precursor to 3.06, a higher resistance level. The 10 MACD combo is not yet present because MACD is still moving below the signal line. But the good news is I am seeing a formation of a bullish convergence between the MACD and the signal line. Probably once the price touches 2.7, we will see MACD crossing above the signal line already by that time. The RSI is still in the neutral level, quite distant from the classical overbought level. The risk level of NIKL remains low. The upward momentum is very strong, according to the DMI and ADX score. Now, the based on the trade and volume distribution chart, the dominant range is between 2.6 to 2.64 or 2.59 to 2.64. That makes the momentum power indicator bullish. The true market sentiment of NIKL is neutral. It's neutral. Anyhow, my overall sentiment for NIKL remains bullish. If you would like to top up, you can go ahead and do that within the dominant range. If you're planning to enter a new position, do take note that the last candlestick of NIKL is already closer to the resistance, to its immediate resistance, than to its immediate support. So that goes without saying that you're going to get a bigger potential risk than your potential reward as far as its immediate support and resistance levels are concerned. So I'm leaving the decision to you if you would like to take that risk, since the momentum power indicator is bullish. Or if you are a relatively new trader, I suggest that you wait for a breakout before you entertain the idea of doing a test buy. Once a breakout is spotted, by that time, the 10 MACD combo will then already be revalidated, I suppose. So that's my advice for nickel. Next, we got RCI. RCI closed on Monday at 1.65. Support is at 1.29. Resistance is at 1.75. The 10 MACD combo is still valid. RSI is still far from the classical overbought level. The risk level of RCI is already high. The upward momentum is not yet very strong, but it's getting there. The positive DMI is above the negative DMI on the other hand. Let's take a look at the trade and volume distribution. With respect to the closing price of 1.65, I would say that the dominant range is between 1.6 to 1.65. That makes our momentum power indicator bullish. The true market sentiment of RCI is neutral also. My overall sentiment for RCI is bullish. Our 10 MACD combo is valid. The momentum power indicator is bullish. You can go ahead and top up within the dominant range. If you are planning to do a test buy, you can go ahead, provided you are satisfied with your reward to risk ratio. You got to do it within the dominant range as well. I am bullish for RSI. That's my overall sentiment. Next, we got JFC. We are now talking about the top 5 losers in our video. JFC closed on Monday at 247 pesos per share. Support is at 243. It's at the brink of retesting the previous support at 243 again. The immediate resistance is at 270. If it breaks below 243, the next support will be at 220 pesos per share, followed by 200, followed by 180. So that's the hierarchy of the support levels. Okay, so foreign investors liked what happened on Monday because they registered a net foreign buying worth 88 million pesos. They bought the dips. They have been buying consistently since July 26. I think they have bought already they're about 600 million or 700 million pesos already since July 26. Nonetheless, these are deep pocketed investors. For most of us retail traders, we have to top up, we have to enter a new position only when our buy signals are confirmed. But in this case, our 10 MACD combo is invalid, and I am seeing a perfect bearish alignment among its 3 simple moving averages. I am using 200, 50, and 10 SMAs. The RSI is downward sloping, pointing toward the classical oversold level, but it's not yet there. The risk level of JFC is already high. Take note, it's already high. The downward momentum is very strong for JFC, okay? Because of a loss in revenue. For the loss in revenue, you can check the news, you can check the disclosure, but we're not about fundamentals in here. We're about technicals because everything is already factored in on our data. Okay, we don't have to. For me, I don't have to waste my time reading disclosures because if the investors or traders like what happened, like what was reported, you will see that being reflected on the price action. So reading disclosures, reading news is already redundancy for me as a technical analyst. Now, with regard to the closing price of 247, I would say that JFC was force closed on Monday. The dominant price point is at 247. If it starts at a price higher than 247, the range between 251 to 252.8 may become alive or active again. But this is more of this is still part closer to the intraday low than the intraday high. Therefore, we have a bearish momentum power indicator. The true market sentiment of JFC is bearish. My overall sentiment for JFC is still bearish. Don't enter a new position yet. I'm not going to give any piece of advice for those who may have had JFC for short-term trading purposes because you may have already, your trailing stop loss should have already been hit when it broke below 270. Okay, don't enter a new position yet. Eyes on the status of our 10 MACD and momentum power indicator, please. Okay, so after JFC we got URC. URC closed on Monday at 161.9. Support is at 152.4. Resistance is at 177.3. The 10 MACD combo is still invalid since it has been invalid since the second week of July. Foreign investors registered a net foreign selling worth 80 million pesos. So RSI is already downward sloping as well. The risk level of URC is moderate. The negative DMI is hovering the positive DMI. So there's no sign of a bullish formation between the positive and the negative DMI. FYI, the dominant range of URC, it was force closed on Monday at 161.9. So I would say that this is in favor of the bears. Anyhow, the momentum power indicator is still bearish. So if URC starts at a price higher than 161.9, you may want to monitor the price between 163.1 all the way to 164. It might trade actively again within that range if it starts at a price higher than 161.9. The true market sentiment of URC is neutral. My overall sentiment is bearish. Of course, we don't have confirmed buy signals. So wait for the 10 MACD combo and the momentum power indicator, especially the MPI, to become bullish again. Okay, when I say MPI, I'm not referring to Metro Pacific Investments stock. I'm referring to our momentum power indicator. I am bearish on URC. Next, we got Globe. Globe closed on Monday at 1,984. So it's already trading below the previous support at 1,986. The immediate support is now at 1,780, or we can plot another line in here actually. The midterm support is at 1,853. So the resistance is at 1,986. Foreign investors registered a net foreign selling worth 61 million pesos on Monday. They have been selling consistently on Globe since July 26th. RSI is downward sloping. It's very close to its classical oversold level. The risk level of Globe is low. The negative DMI is still hovering the positive DMI, but it's not yet it does not have a very strong downward momentum. It does not show a very strong downward momentum yet, but I am not seeing a formation of a bullish convergence between the positive and the negative DMI. In short, this is still in favor of the bears. The trade and volume distribution chart of Globe shows that the dominant range is between 1984 all the way to 2030. The momentum power indicator is bearish. We don't have confirmed buy signals yet. The true market sentiment of Globe is bearish. The descent in price, meaning to say, is still more likely to continue. Don't buy Globe yet. Okay. Next is IDC. I am bearish on Globe. IDC closed on Monday at 6.28. Support is at 5.8. Resistance is at 7.2. The 10 MACD combo is no longer valid because the price broke below the 10 SMA, even though MACD is still above the signal line. However, MACD is already downward sloping, and I am seeing a formation of a bearish convergence between the MACD and the signal line. RSI is downward sloping, although it's in the neutral territory still. The risk level of IDC is extremely high. I repeat, extremely high. I am seeing a formation of a bearish convergence between the positive and the negative DMI. So if you locked in your profits when RSI hit 80 and above, or when your trailing stop loss got hit, that was a good move. Okay, respect your trailing stop loss. If you entered a new position in IDC when you spotted the 10 MACD combo being revalidated, sometime in, when was that? Let's see. Sometime in, let's double click on this, July 8th, on the first week of July. Congratulations. So you should have made a good fortune in IDC if you followed strictly, if you strictly followed our 10 SMACD and momentum power indicator. So congratulations on that. If you traded IDC, would you mind sharing your story in our private clients forum? Okay. But for today, as far as Monday's trading is concerned, the dominant range is between 6.2 to 6.4. It's in favor of the bears. So the momentum power indicator is bearish. So the true market sentiment chart for the true market sentiment for IDC last Monday was bullish. So even though it was bullish, we don't want to buy the dips yet. As retail traders, we don't have billions. That's plural. We don't have billions. Most of us don't have billions just to trade and make a market move on a particular stock. So let's wait for our momentum power indicator and our 10 SMACD combo, ideally speaking, to become revalidated and to become bullish respectively once again. Okay, so don't enter a new position on IDC. I am still bearish on IDC. Last in our discussion in our video is PHA. It closed on Monday at 0.67, support is at 0.53, resistance is at 0.78. Our 10 SMACD combo remains invalid. RSI is very close to the classical oversold level. The risk level of PHA is moderate. The negative DMI is hovering the positive DMI, although the downward momentum is not yet very strong because the ADX is still below 25 points. I am not seeing a bullish formation between the positive and the negative DMI, so that's still in favor of the sellers. The dominant range on Monday was between 0.65 to 0.68. The momentum power indicator is bearish. The true market sentiment of PHA on Monday was bearish as well. My overall sentiment for PHA remains bearish, so don't enter a new position on PHA for now. Okay, so there you go. You've heard my technical analysis and recommendations for these 10 stocks. In preparation for Tuesday's trading, I repeat, if you are a subscriber for 1 year, I highly recommend, actually it's mandatory, for you to attend the Evergreen Strategy in Trading the Philippine Stock Market. Okay, so that you will have a crystal clear understanding on why we are using the trade and volume distribution, when do we need to use it, why we should use it. Same thing goes for the true market sentiment and our own and other original methods that we have at Equilist Analytics. And that's the very reason why I automatically gave those 1 year subscribers a 50% discount, so that you have no bigger reasons for you not to attend. It will, I guarantee you, it will fast track your understanding of what I'm teaching you here at Equilist Analytics to the private clients forum. Many of those who attended this Evergreen seminar, who are current subscribers for 1 year, told me that they got a faster and a better understanding of what we're discussing in the forum when they attended the seminar and when they heard me discuss things live. They also got the opportunity to ask for clarifications regarding the things that they don't quite understand, especially when we just discuss in the forum through textual communication. So attend this seminar. So this coming Saturday, I'll be in Cavite. Okay, and then on August 17, the following Saturday, I'll be in Makati. Okay, so register now, buy your ticket, so and then avail of your 50% discount. Then if you are a 6-month subscriber, of course you don't have the 50% discount, but at the moment there's an early bird rate for the tickets. Try to register. You will receive an automated email with a discounted price. It's still a discounted price, but of course those 1 year subscribers will get of course a bigger discount. What's 50% of 6.5? So that's just about 3,250 For the non-1-year subscribers, if you will register and buy your ticket while the early bird rate is up, I think you will only have to pay 3,995. It's about 5 or 6 or 700 pesos higher than the ticket, than the discounted ticket of the 1-year subscribers. But still, okay, the 3,995 is a lot better than 6,500. Goes without saying. So there you go. My name is JC De Guzman. If you have follow-up questions, make sure that you ask in our private clients forum. Have a great day.